staying with JP Morgan, may have already set the tone in that it looks like banks will be reporting lower compensation costs this year. But it looks can be misleading. The change more likely reflects Wall Street's desire to dodge this outcry over their outsized paychecks. And Sue Keenan has more on this story. Sue?
Well, as the big banks begin the reporting season, analysts say Goldman Sachs, Morgan Stanley, and we're already hearing from JP Morgan Chase, likely hand out a combined total of $27.6 billion in bonuses. Now, that's an all-time bonus high. In fact, 49% higher than the bonus pool of a year ago. But it is less than the number that analysts predicted back in October. There's another factor at work here. Awarding a greater portion of the bonus as stock or deferred pay turns out to be a key way for banks to reduce the costs that they are reporting now. It also avoids some of the outrage the experts say is just not going to go away.
People are jealous. People don't understand why anybody would make money after the crisis and what happened, how people can't feel terrible that there was a crisis and how can you walk away with money. But what they don't understand is it's about retaining talent and attracting talent.
And you'll hear similar thoughts from Frank Glassner, CEO of Veritas, another compensation expert, saying we've gone from an era of greed is good to jealousy is justified. And as a result, he says, it's like playing Threecard Monte when we look at how these bonuses are packaged. The size of the bonus, he says, hasn't really changed, just the form of it. Betty?
And Sue, I mean, our regulators are encouraged that these specific changes, they're tying pay to long-term performance right now, right?
Yes, and by paying stock and deferring cash payouts, banks justifiably are reporting lower costs right now. Morgan Stanley plans to defer at least 65% of year-end bonuses to its top 30 executives, according to people familiar with the packaging. Goldman Sachs has already said that its top 30 execs will get year-end bonuses and restricted stock. So complying with regulators doesn't mean smaller paychecks. It does mean bank statements that are more difficult to decipher when it comes to executive pay. We do know that JP Morgan pays its top executives mainly in stock, and that stock has to be held on to. So again, that makes it harder to figure out what they're getting now. Back to you.
Okay, Sue, thanks so much.